Hi, everyone. I'm Rena 9, and markets remain volatile today after Monday's dramatic sell-off. The Dow has recovered after dropping more than 500 points today at the open. It closed yesterday down nearly 1,200 points, the single biggest point drop in history. But it's important to note that percentage-wise, the drop was under 5%. Well, earlier, markets reporter from Street.com joined us to discuss it. Scott Gamm.
Well, yesterday was quite a day. As you mentioned, we had the single largest point drop for the Dow in a day. But again, that's different from a large percentage drop because percentage-wise, we were down only 4.5%. When the market crashed in October of 1987, that was only a 500-point drop in the Dow, but that equated to a 22% drop. So it's important to keep these comparisons in mind. And right now, look, volatility is obviously still with us. I think the market is trying to find its footing. Some analysts are saying that this feels like the market is bottoming out, where we have a lot of volatility, light volume, and I think that's what we're seeing today.
I think it was CNBC, one of the reporters was asked Steve Mnuchin, Treasury Secretary, should the president also take credit when the market drops? He takes it when it rises and it's high as well. And he said that since elections, it's been up 30%. And that's the bigger overarching picture. What are analysts saying? Are they concerned by this sell-off?
Well, keep in mind, there's a big difference between the stock market and the economy. So when the market has a big drop in a day, especially like what we saw yesterday, which, by the way, was largely attributed to computer trading algorithms, right, with these massive sell orders. And that's why we saw that 1,000-point drop in a matter of minutes. But that's different than the overall economy, which still remains strong. Unemployment's at a record low. We saw a big rise in wages in that report on Friday. So from the president's point of view, while he's touting the stock market, I think he's also touting the overall health of the economy, which is much different than the day-to-day gyrations of the markets.
So talk to me about correction. A correction is when there's a 10% drop.
Yes, from a stock's most recent high. So in this case, it would be January 26th is when the Dow and the S&P 500 reached a record high. I believe the Dow hit correction territory briefly today and then moved out of it.
So are we in a correction here? Is that fair to say?
Well, we briefly were. And look, a lot of strategists were calling for some sort of pullback. I mean, stocks have been going up in a straight line for years. And I'm uncomfortable necessarily calling it a correction because look at the move we had in January. It was a parabolic move higher. Stocks were up 8%, 7% in January. We sometimes see those gains across an entire year, let alone just 1 month. So is it fair to call it a correction after we've had such a big move up? I think the jury's out on it. Stocks are still relatively expensive. I mean, we're at the same levels in the markets as we were around Christmas. So that puts it into perspective.
When you look at sort of the overall market and the health of what we're seeing here, what are the other factors that play into this?
I think earnings growth, and we're going to continue to see companies release earnings this week and in the coming weeks. And we've had about half of the companies in the S&P 500 report quarterly earnings so far. 80% of them beat their revenue expectations. Earnings growth is expected to stand at, we're expected to see a double-digit gain in earnings growth this year. That's huge for the market. So I think the fundamentals of the economy and the markets remain strong. These corrections, these day-to-day bouts of volatility are expected.
So if you're someone who is vested in the markets, what's your best course of action at this point?
Well, I think it depends on where you are, right? If you're a long-term investor and you don't need the money in your investment accounts anytime soon, look at this potentially as a buying opportunity because stocks are on somewhat of a sale. Again, we're still at the same level we were in December, so it's not quite a huge discount, but it's something. Now, if you need the money within the next year or two, then you might want to make some tougher decisions and book some of the profits that you scored throughout 2017. 2017 was a great year for the market.
It certainly was. I did have a feeling at one point, just sell everything and get out. But
don't panic.
Don't panic. That's the big overarching rule I've heard from everyone.
Exactly.
Thank you very much for joining us, Scott.
Thank you, Rena.
Appreciate it.